Okay, in this video, we're going to talk about just the daily time frames. We're just going to do a quick analysis on the majors, some of the currency pairs that I execute trades with the trade copier and inside the chat room with my coaching students. It is April 7th, 2019. It's Sunday. Market has opened for trading. Obviously, we had non-farm payrolls on Friday. Didn't really provide me with a whole lot of opportunity there. This is the euro dollar. This is the daily time frame. Now, for those of you that are watching some of my other videos, when you see these videos and I talk about specific trade strategies, I use different templates. This particular template is more or less a reversal template. So I use these indicators here that you see on the screen, not for the breakouts, to confirm the breakouts, but to identify possible reversals, major reversals as well. I use this same template. Settings are a little bit different, but I use the same template on the 30-minute and the 1-hour chart for day trading. So at the same time, while I'm looking for day trades, I'm also watching the 4-hour and the daily time frame to make sure that things are lining up correctly. For example, on the daily time frame, I want to be aware when price finally hits a support area or resistance area. I want to make sure that if I'm trading for day trading purposes, let's say on the 1-hour time frame, and I'm looking for continuation breakout trades, I want to know that the trend also looks the same for the most part on the daily time frame. And sometimes I can manage that and continue to trade that in the same direction for a while, as long as the trend on the larger time frame gives me that confirmation. Here, what you see, and the way I see it when I stand back, is a lot of consolidation. All of this consolidation, for the most part, with this dip low here, that was from November, approximately the middle of November. I'll get that exact date right there. This was November 12th, 2018. And from that point, everything, I mean, I'm not saying that there's no opportunities here. This is a daily time frame. There are plenty of opportunities for day trading, but what I'm getting at is this is, for the most part, quite a bit of consolidation. Very often with my trading strategy, if I miss a trade when price is inside of the middle of a consolidation range, to me it's a little risky, right? You probably have done this same thing yourself. When you see a pattern, you see a bullish pattern, but you don't know if it's going to continue higher or if it's going to pull right back down and still bounce around, and that pullback could stop you out if you're using a stop that's too small. And it really doesn't make any sense to use a stop that's either above that high or below that low if you're trading inside a consolidation, because very often that stop, if you incorporate those two levels, would also be just too big of a stop, and it wouldn't make any sense because the target is normally back up here to, or what you would expect, the high or the low. Now, obviously, it's just sort of traveling around, bouncing around. They're not always going to give me an accurate, pattern. For example, this bullish pattern right here, it looks bullish. Same thing with this one, same thing with this one. But in this instance, it didn't work. It collapsed and pulled right back down. That would have stopped me out. So very often what I'm doing when I see consolidation, even on a 1-hour time frame, now remember, this is the daily time frame, but even on a 1-hour time frame, I'm still going to wait for price to, for the most part, reach support and resistance and then trade the reaction. When it reaches support and resistance, I'm either going to see a breakout or a bounce, which I would switch between these two charts using these different indicators. I would switch between my reversals chart or my breakouts chart. Now, this candle right here closed below support March 7th. This was an old support, right? From November, what did I say, 11th there? November 12th. That signal candle right there, that was and looked like a possible continuation breakout trade. The continuation breakout trade is the same one that I use on the 1-hour time frame for day trading purposes. When I execute a continuation breakout trade on the euro dollar, I'm normally looking to earn about 55 pips on the trade, because I can only expect price to move only so far within a given trading range for that particular day. So I've got to incorporate daily average trading ranges. Now, obviously, sometimes news, whatever it is, could create a bigger situation or a bigger move, but the pattern is the same, the continuation breakout trade, regardless if it's a 1-hour or 4-hour or daily time frame. I'm still going to be looking for the same signals. So when this printed this continuation breakout signal candle, I don't get in on the signal candle. I still need to wait for what I call a 3-pip entry, which means eventually price needs to take out the low of the signal candle by 3 pips before I get into the trade, expecting that the trend is going to resume. Now I'm going to share with you a tip that I teach all of my coaching students when they're executing the continuation breakout trade. Very often when they see a pullback like this, people will say, and this is something that I had to struggle with myself, at what point do you consider that if price retraces after a continuation signal candle, and it looks like it's going to go lower, but it doesn't, and it keeps trailing higher and retests some of these resistance levels, at what point would you no longer think that that continuation sell signal candle is valid? And the way I calculate that, and I've always done this since 2001 when I put this method together, if price comes back up and takes out the price swing high that created the signal candle to sell it, which is right up here, I'll go ahead and put the crosshairs in here. That's the price swing high that created this entire move to the downside, where that candle on the 7th of March, when it closed below that support level and printed that signal candle, that's what created that level here. Shit. That's what created this. That's what created this sell signal candle. So again, when price takes out the high of the price swing that created the sell signal candle, the continuation breakout trade, then I cancel the trade. In other words, if price would have stopped just to this level here and then returned back down and then gave me the 3-pip entry, I would have considered selling it and expecting that the trend to the downside was going to resume, and I could target some of these further distances or these price targets based on, let's say, Fibonacci retracement levels, which is something that I use on a regular basis on the daily time frame. That is pretty much the same thing that I do on the 1-hour chart. But back over here, this was March 20th. Price took out the high of the price swing that created the sell signal candle for the continuation breakout trade. So then when price comes back down, I can see that it's obviously in a downtrend for a few days here, but it's a matter of getting my expectations in line, because very often people will sell it up here and then they'll think that it's going to take out the lows, and then they've got these price targets that are way down, like, the 1,000 level, maybe just the, whatever targets that they have, but you've got to get that all in line, right? The next step is to wait for another candle to close below that sell signal candle. So right now I don't have that. So, last week this was a relatively easy trade. I took some small trades and some small bounces, but, in the opposite direction of the trend, but I want to do it carefully. Very often I get the question, when I see a trend like this, even if it's on a 1-hour time frame, when I see a trend to the downside and it's already been in place for a little while, at what point, if you can guess that it's going to go to support or resistance and it looks like it's likely to do that, you still have to be careful about your entry if you get in too late, because if you get in the middle of the move, there could be a retracement, maybe a reaction with some news or comments and things like that. There could be a retracement, and then price would eventually still go down in your direction where you expected it to go, but you would get stopped out and knocked out of the trade too soon if you're using a stop that's too small. In that situation, it's best to just wait for price to stop that move, wait for that trend to just eventually find and settle a support low or a resistance level, and then either trade the bounce or, again, wait for another breakout. So again, this has been pretty choppy, but for obvious reasons. Looking at everything, considering what's going on in the Eurozone, Brexit, even some of the things that were happening over the last couple of months in the United States, it doesn't surprise us at all that we would see this kind of behavior. So this is a bit choppy. I'm not saying that there isn't any opportunities here, but it is a bit choppy, and we're sort of looking at some of these new levels, identifying new ranges of consolidation and waiting for some breakouts. So we take this information. What I do is I take this information that I see here on the daily time frame. I'm going to be paying attention to these key support levels, looking at possible breakouts, identifying that they were canceled out. It just looks like another retest of this support at the time, for the time being. This could all change in the next day or so, but we want to continue to monitor this. And we have a bullish engulfing candle in here at support. So we want to know, is there going to be any follow through or follow through to the upside, or could there likely be another closed candle below that support low from March 7th, which could then possibly indicate another continuation breakout trade to the downside. And then if it lines up okay and we get the right entry, then at that point we could expect the trend to continue. Here we're going to take a quick look at the pound dollar daily time frame. This spike low, that was 2nd of January, And so we've got that A low, B high, C retracement, approximately the 618. When the candles start to close above that B high, everything adjusts and we have a new A low, B high, C retracement, and now we're sitting here pretty close to that support level, so we've got a new range of consolidation. So far I don't have a breakout candle outside of this consolidation range. Of course that's going to correlate with most likely with Brexit, but again, even if it closes below that support level, and we've been talking about this for the last few weeks, if it closes below support here on the daily time frame, we still want to confirm everything with these indicators to make sure that it's a solid continuation breakout trade. Sometimes they close below support and then they turn around and go right back up with no entry, and then price continues and just resumes. It just looks like a pullback where it finds some kind of support in this uptrend. So we want to pay attention to the fact that sometimes just a trend line, when price breaks that trend line, it doesn't necessarily mean that the trend's over with, it's going to shift and it's going to start moving in a different direction. There's a lot more in regards to confirmation that I'm going to be looking for and I need in order to really be convinced that this uptrend is over with for the most part, and then it's going to start heading down lower. Whether it's likely or not, again, it's really going to come down to most likely with Brexit, but we're just going to have to keep an eye on it. At this point, though, if it ends up retesting that support low again and bounces, it might give us an opportunity to trade it for a couple of days, maybe in the opposite direction, just again trading off of support and resistance inside of consolidation. It would be similar to what I do on the 30-minute and 1-hour time frame. Again, I'd be looking for these patterns on the daily time frame and then taking this data and this information, what I see, and then looking for those opportunities on the 30-minute and 1-hour chart. Usually they'll correlate maybe with an HL30 trade if it's a bounce off of support. If it looks like a small break and it's bouncing off of support and then continues to trend, it might look like a continuation breakout trade on the 1-hour time frame. So to get more details about each one of these strategies for day trading, and you want to really get down to that pinpoint specific 1-hour or 30-minute time frame so that you can minimize the stop but make profits just about every day that these set up. I'm not saying that these trades set up every day. They don't. Sometimes there are days when I don't have a trade, but when they do set up, if you want to get that information and learn how to trade these, they're inside of the membership area, the trading course. It's a bonus with the trade copier. So we're going to take a look at this at the end of the day on Monday. Again, it's Sunday here in California where I live. Market is open for trading. But on Monday evening at the close, we'll take a look at it after the rollover and see what these daily candles are telling us from that point on for the rest of the week.